How many of you in here hate paying taxes? How many of you in here want to pay as little as possible? I'm going to give you a blueprint of how you can do that. This is the stuff that you're going to have to follow when you come work with someone like us or a tax advisor. And specifically, we're going to talk about short-term rental real estate too, because right now, you may have heard this loophole that's going around. I do not think it was the IRS's intention for it to happen this way. So with taxes, you want to permanently lower them, or you want to temporarily defer them, kick the can down the road. How you can lower your taxes. The first one is a deduction. You coming to an event, you buying a vehicle, you going out to dinner with a colleague. Those are deductions that you will write off against your income and get that write-off, therefore lowering your tax bill permanently. Primary home exclusion is a great example too. You live in your primary residence, you've been there 2 out of the last 5 years, and you go sell it. You bought it for 5, you sell it for 8, you have a $300,000 gain. That could be tax-free if you were married. And another one of long-term versus short-term. If I have an asset that I choose to hold long-term instead of short-term, I can permanently lower my tax bill by meeting that standard and holding it long-term. What does it look like to defer my taxes and kick it to another year? The first one is a 1031 exchange. If I buy a property for 5, I sell it for 8, let's say it's a rental, I have a $300,000 gain. I can pay tax on that $300,000, or I can choose to roll that $300,000 into a new property, not touch any of it, and pay 0 tax.